Good morning. You're watching us here on Trading Hour. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu and this is our new Trading Hour team, Hormaz Fatakia and Ritu Singh. Well, the market's at around that 26,100 mark, easing off from record highs earlier. The good part is that the midcap index has recovered from the lows at an index level. It's above my head right now, marginally in the green. The only thing we need to watch out for is what happens to those trailing lines, the red and green lines, which are still far and wide apart right now. But do they come any closer at any point in time or not is something that we will be tracking. We're seeing some traction in a couple of these individual stocks, but more on that in just a bit. For starters, Ritu, Hormaz, both of them, the new Trading Hour partners. How does it feel, Ritu?
Well, it is a lot of fun, and let me tell you, it's been a very exciting start given what's happening with the rupee. In fact, today also, if you look at it, a new record low, 89.88 to the dollar. That's where we have the rupee breaking past what we saw was a new low yesterday of 89.78. And actually, since we got that, the deficit data on the 18th of November, there's been a steady fall, new record lows every day, and that is something that is turning the market sentiment weak. But what's buzzing in trade today? Let's go across to Hormaz to find out. Hormaz.
Oh, well, the broader markets are seeing some recovery, as Mangalam just pointed out, and there are stocks that are moving well and truly on the upside on very significant volumes as well. And Forgings, right from the start of the show, from the start of the day today, has been on the up move. The top gainer on the Nifty 500 today is almost 10% higher on the stock. The biggest single day gain and volume move since May of last year, has already gained in 5 out of the last 6 sessions. And look at the volumes today. 20 lakh shares on Forgings have been traded. The 20-day average here is only 7,000 shares. So on very significant volumes, the stock has moved above its 200 DMA, which is around 340, but has been a bit of an underperformer in the last 2 years. It's been down 23% year to date, was down 4% last year as well. Spark is the other one. Sun Pharma Advanced Research, the biggest single day gain since March. Volumes are the highest in a month in today's session. As of now, of course, they have close to 50 lakh shares that have been traded. The 20-day average is just 1.5 lakh, and the stock is now nearing a very important level. The 200-day moving average, it's around 145.5. The stock currently at 143.5. So nearing important levels is Spark. But like Forgings has been an underperformer, down 28% this year, was down 30% last year as well. And lastly, HCC, that's a news flow driven move today, 10.5% higher on the stock, the biggest single day gain since March here as well. They announced the terms of its rights issue, which has been priced at a 50% discount to yesterday's closing price. We have had more than 3 crore shares that have been traded on HCC. The 20-day average is around 41 lakh shares, and the stock, despite this move, still remains below key averages. Is down around 32% so far on a year-to-date basis, and is set for its first negative year of returns since 2020. So an underperformer overall for is HCC, but buzzing in today's session, guys.
Take that point, Hormaz. Thanks a lot for that. Meanwhile, we were talking about a couple of these midcaps doing well. Midcap IT in particular is on our radar. Look at Birlasoft. That stock's seen a big move from the lows. In fact, opened marginally in the red, and now the midcap IT pack should come up for you. In fact, Birlasoft has moved to the high point of trade. We are also seeing some traction on Cyient. Cyient also was lower in the earlier part of trade so far, and now has seen a bit of a spike, currently at the high point of trade. And alongside that, we are seeing some traction in other names as well. Speaking about traction on mid-cap IT, Mastek, none bigger than that, because as the story flashed on your screen, the stock actually saw a bit of an up move, a big vertical spike, almost 4.5% higher. The promoters are looking to sell stake. Rachna joins in with the story. Rachna, what are your sources telling you?
Right. Sources tell CNBC-TV18 that Mastek promoter group is exploring the sale of nearly 20% stake in their company. Now, this is significant because the promoters currently hold about 36%. So the sale being contemplated is more than just a routine dilution. It could meaningfully reshape the shareholding structure. What's also noteworthy is the pricing. People in the know say that the promoters are seeking a premium of up to 25% over the current market price. Now, what we also understand is the timing of this sale that has 2 big triggers. First, succession planning, and the other is the broader effort to bring leadership stability after a year of major top deck changes. And that's in context because Mastek has been through a transition-heavy year. The company appointed Umang Nahata as the CEO effective January 2025. The finance function has also seen back-to-back leadership shifts. Raghavendra Jha first became CFO in May 2025, and Deepak Kedia took over as the CFO in November 2025. So the potential stake sale is being viewed by many as a part of a larger reset, the one that aims to give the company a steadier foundation as it leans into the next phase of growth. According to sources, the promoters are sounding out a mix of strategic investors and long-only institutional funds that aligns with Mastek's revenue footprint, where nearly 65% of the business comes from the UK and the Europe. Mastek was founded by Ashank Desai, Ketan Mehta, Radhakrishnan Sundar, and the late Sudhakar Ram. And as always, we reached out to the company for a comment, but Mastek declined to comment.
All right, take that point, Rachna. But just a quick one. Perhaps you may or may not know about this. Is there any timeline that they're seeking for the completion of this deal?
Not really. As I said, they're looking for strategic investors as well as long institutional funds. So right now the pitches are going on, but the intent to sell is quite clear.
All right, the intent to sell is quite clear, and so is the intent of the street to take note of that story, because as Rachna was speaking about it, it's a big move is what we've seen on the stock, and the fact that it's a part of a larger reset of the company's strategic and long-only investors coming in alongside, the price, which could be a 25% premium to its current market price. Thank you so much for bringing that to us, Rachna. Definitely the street's taken note of that. But another thing that the street is watching out for is Raymond Realty. The shares have surged after the company has launched an ultra-luxury project in BKC with a land parcel of 2 acres, a revenue potential of 2,000 crores. Hari Mohan H. Sahani, who's the MD and CEO of Raymond Realty, now joins us. The important points, Mr. Sahani, will be how big will this premium housing segment be for you, the project pipeline outlook, and how will this expansion be funded? So let's talk about the timelines. By when do you first think that, we'll be able to realize the revenues of this 2,000 crore, the recoveries when they come in? And secondly, how is this expansion going to be funded? 2 parts here.
Yeah, sure. So this project that we are launching, it is going to be launched today. We just got the RERA registration done very recently. It's Invictus by GS at Bandra, BKC, just at the edge of BKC, very prime location. So it warrants a premium and a luxury project. So that's why we have come out with our highest offering, which is Invictus by GS. And this is about 2,000 crore top line project. The entire duration of the project is about 4.5 years. We are scheduled to complete it. The work at site has already begun. The demolition is complete. The site preparatory work is going on. And the launch, the experience center, everything else is also ready. So the revenue recognition for this will start, a very marginal part will start from this financial year itself, since we will get 1 quarter's benefit for this project. In terms of pre-sales, our overall pre-sale target for the year, we are given a guidance that we'll show growth of 20% over last year. So which is close to a 3,000 crore number, which is what we have promised all along. And we are on track to achieve that. So this project will be an addition, will actually contribute to that. And as far as your second part was about the funding of this project, the funding for this project is already in place because the equity that we needed for the project most of that equity has already been infused in the project, because the approvals, because that's the big part where the money really goes in. And now that we are launching, the cash inflow will start. And as far as construction is concerned, we always get some kind of construction funding from a bank in place. So that is also in place. So the project is financially closed in that sense.
Yeah.
And,
Mr. Sahni,
the pre-sales will only add to that.
well, Mr. Sahni, let's talk about those pre-sales. You're talking about a 20% growth, over FY25. In FY25, you had about 2,300 crores and you've only done 760 crores so far. So how much better can the second half really be? And if you could also tell us what kind of new launches you have lined up in this ultra-luxury segment and otherwise.
So the ultra luxury segment is this one project that we are doing in BKC. Then there is one project we are doing in Thane as well, which is also branded Invictus by GS, because we believe in product branding. Each project is not going to be reinventing the wheel. So we have 3 product categories: 10X, Address by GS, and Invictus by GS. So in the luxury segment, we have Invictus by GS, which is what. So one launch we have already done in Thane this year for Invictus by GS and this BKC one. So that's on the luxury end. Then other than that, we have done one more launch in Thane, which is in the premium category, which is Address by GS. And going forward, in Q4, we will be launching in Thana a 10x product as well, which will be a large project. And we are launching some retail as well. So we've got 2 more launches coming up in Thana. And outside of Thana, where we have other contracts, there will be 2 more launches apart from this launch. So we've got one other launch which is lined up for this quarter itself, if all goes well, or it may spill into first 2 weeks of Jan, which is Q4, which is the Vadala project that we have. That is also a very large project. And then Sion is another one which is scheduled to be launched in Q4. So that makes it 3 new projects which will certainly be launched this year outside of Thana and 2 in Thana going forward. So 2 we have already launched in Thana. So these projects will contribute to the pre-sales number. And this is how it was planned for the year. So it's not by accident that we've got 760 pre-sales in H1 and then going forward it is heavy on H2. That's how it was planned because the launch of the projects was scheduled in that manner.
So, Mr. Sahni, you are confident that you will surpass that FY25 figure of 2,300 crores in terms of bookings in the second half?
Certainly, we will give a decent growth on top of that as well.
You have been speaking about 3,000 crores, so you are confident of that, right?
Yes.
All right.
So, and in the ultra luxury segment as well, Mr. Sahni, you mentioned Thane and the BKC bit. How much bigger do you see that vertical becoming as part of your overall business? And are there any other geographies or micro markets that you are looking at when it comes to this segment beyond BKC and Thane?
Certainly. I mean, it all is warranted by the kind of location that we get because, in luxury, location is what really matters. And we obviously have not focused on apartments worth 100 crores plus, which is South Bombay and some of the other markets. We are open to considering projects there, but we essentially want to stay at the deep end of the market and not go in the shallow part of the market. So where the buyers are going to be very limited. So keeping all that in mind, our selection of sites will depend on that. And by nature itself, the moment you do luxury, the exclusivity comes in. You really cannot go mass. And that's in every product category and not just real estate when it comes to luxury. So that will always play out. So you may not see many projects in this category. So most of our projects you will see in address by GS category, which is also a premium category. Not affordable luxury or aspirational is what we really look at, not really affordable, because affordable is also a much abused term now. We don't know what it means. So yeah, that's
right. Take that point. Thanks a lot, Mr. Sahni. Out of time, not out of questions, though we request you to join us once again to discuss, the redevelopment theme, also your collection efficiency, etc., your cash flows. We'll talk about all of that at a later date, but as of now, the street likes, what you've been talking about in terms of collecting, or rather booking 3,000 crores, despite doing just about 700 crores in the first half of this year. Take a short break, come back, focus on the crypto markets. Manisha Gupta joins in on the other side.
Welcome back. Shifting focus to the crypto markets, the sell-off in Bitcoin continues, and Manisha is here to tell us just that.
Oh, well, absolutely. If you look at the last 24 hours, the cut only has gotten deeper here. With the way what we've done in the last one day has been the biggest one-day decline that we have seen since the month of March there. So take a look at the overall numbers then, and the market cap for Bitcoin or other cryptos has declined to below $3 trillion now. The all-time high that we've done in this year has been to the tune of 4.4 trillion. So clearly a very sharp decline coming in as far as the money seems to be moving out of this space also. If you look at overnight, again, it's 16 million worth of longs liquidated in past 24 hours when it comes to Bitcoin. But when you talk about the overall exchange liquidation, that number is quite huge, to the tune of $400 million there. Well, we have seen decline in futures volumes and open interest as well, telling you exactly that the money seems to be rotating out in the other asset classes, but not staying in crypto, is what we've seen in the last couple of days here. Well, the sell-off in crypto has resumed for the month of December. The risk-off sentiment that we have seen in broader asset classes seem to be impacting this space as well. And when you look at the shares and digital asset-related stocks in the Asian markets, well, they clearly have declined quite sharper. And this has come in after the People's Bank of China warned of illegal activities relating to digital currencies, and that has led to a sell-off across Asian markets within exchanges there as well. The other thing that the street will watch out for is the Bank of Japan on whether or not it hikes interest rates. The bond yields in the meanwhile have hit a 15-year highs, impacting this space as well. If you look at the overall large leverage positions, they still are holding, telling you that a further decline in cryptos from here on, if any of these positions were to unwind, could be even deeper. So leverage across Bitcoin exchanges is up to 200 times in some of these instances. If you look at the crypto futures therein, there's an estimated $787 billion of outstanding leverage there as well. And when it comes to ETF, well, the outstanding positions on that one are to the tune of $135 billion as well. When you look at the last 1 month, the cuts have been quite deeper. As you can see, whether it's about Bitcoin, Ether, Polygon, we're down anywhere between 20 to 30% on this. And that pretty much has been the case with other high market cap cryptos, where you have Cardano, Solana, Binance down anywhere between 13 to 30% yet again. So the last 1 month, last 1 week, the current year, all trading into the negative for many of these cryptos.
All right, Manisha, thanks very much for taking us through that. But Bitcoin's not the only one losing steam. You look at the rupee, that's been the story, new day, new low. And right now, as we speak, at about 89.91, that's where the rupee is, not too far off from 90, that psychological mark that markets will be watching out for. As I said, today's levels at 89.90, that's where we are at about, which is broken past yesterday's low. That was about 89.78. In fact, since the 18th of November, since we got those deficit numbers, the rupee has been on this sharp downward trajectory. It's lost about 4.5% this year alone, and 1.3 rupees almost, since early November. It is now the worst performing currency. It remains even below the Indonesian rupiah and the Philippine peso. So what's really going on? It is the continued sentiment about the lack of a trade deal with the US, and of course, the foreign investor selling that continues heavily in the market because, Indian equity is still at an expensive valuation versus peers. What also makes it difficult is the fact that our capital account deficit has now been in deficit for 2 consecutive years for the very first time since 1991. And typically, the current account would be funded by the capital account surplus, but with that being in deficit, there has been renewed concerns as well. Of course, it wasn't helped by the fact that we got a solid growth number of 8.2% in the second quarter, but the fact that the nominal GDP was, still in single digits, sort of indicated that perhaps the economy is not as hot as the real GDP numbers seem to indicate. But what's really going on in the market? How close are we to that 90 level mark? To take that forward, we have with us Sakshi Gupta, who's a Vice President and Senior Economist at HDFC Bank, and Ashish Vaidya, the Managing Director and Treasurer, Global Financial Markets India at DBS Bank India. Thanks very much, both of you, for joining in, Ashish and Sakshi. Sakshi, is the RBI going to let it slide to 90? Is that the next level to watch out for? How realistic, are we to getting there?
Well, thanks Ritu, for having me on the show. Look, you laid out what are the pressures on the rupee, right? I think at this stage, in the absence of any positive announcement on the trade deal, I think we are stone throw away from that 90 psychological level. While I think that the RBI's intervention strategy so far has been to limit volatility in the rupee, come in and try and create some amount of stability. I think with the amount of risk aversion in the system because of a lack of trade deal, beyond a point, I don't think that they are going to target a particular level. So I think it really boils down to the outcome of a trade deal announcement.
Right. Ashish, you have your ears and fingers close to the screens at the dealing room. What is likely? The big daddy comes in at some point in time, or what are the institutions doing here? Are there any levels that we're looking at?
Yeah, hi. Thanks for having me there. I think broadly, Big Daddy is around and probably smoothing the volatility for sure. And I think we have seen that. The point is that the currency INR is at an all-time low. And I think looking at the technicals and I think not be surprised to see anywhere between 90 and 92 in the near term if there is no positive triggers there. Because the fundamental setup in terms of numbers, whether it is current account trade, etc., everything is we're seeing a headwind, from that side. So, but having said that, I don't. If you look at the net inflow outflow, from the equity and the debt market in total, it's not been a large outflow as such. So the fundamental picture in terms of exports deteriorating and imports actually increasing is actually causing the rupee to depreciate, and that's why we are probably amongst the worst performer within the group of emerging market currencies.
So Ashish, you mentioned you are seeing levels of 90 to 92 in case there is no positive news that comes in. But do you believe that once the 90 level is breached, do you believe any intervention from the RBI to take place just for a brief while to ensure that there is no rapid deterioration of the currency as we have seen over the last couple of weeks?
So I think in bits and pieces, I think like RBI stated policy, they will be there to smoothen the volatility. They're not really there to manage the level of currency. I think that stands true, and that stands true in every situation, whether it was at the 54, 55 levels, whether it was at the 75, 80 levels. So it will stand true at this also. Having said that, obviously, I'm not seeing, there's a lot of expectation about the US trade deal getting done, and that's sort of getting built in. And that's the reason rupee is not really flown. So in case there's any negative news, then I think you can really see a spike. I was also talking from a technical angle. I think because it's already breached the all-time lows, the rupee, I think it has a potential to go anywhere between 90 and 92. I'm not saying it's a done deal, but it's a probability which I will lay almost 60-70% weight on that.
Sakshi, how much of a factor do you think this sharp rupee decline is going to be when the MPC meets to decide on the rates this Friday? And if the RBI does decide to cut rates, do you see a further pressure on the rupee?
Right. I think that's a interesting point from a monetary policy perspective. But the way the RBI has behaved so far this year, right, I don't think that the rupee in itself is the dominant driver of the interest rate decision. I think that, if you recall, even in February, earlier this year, when the rupee was close to or had just breached 88 levels, the RBI, went ahead and started its rate cutting cycle. So, I do believe that while, yes, rupee volatility, rupee pressures are important, I don't think that they are the dominant factor. I think that the RBI, the upcoming policy, will perhaps focus more on assessing what is happening to domestic growth, not just in terms of what has happened so far, but also perhaps be a little bit more forward-looking. Try and assess the implications of US tariffs, since we still don't have a trade deal. And I think take comfort from the fact that inflation continues to be very, very low and is projected to remain below, their median target of 4%, at least in the middle of next year. So my view on, the RBI policy, although it's a very close call, I think there is a case to be made for the RBI perhaps to deliver, a rate cut in the upcoming policy. From the rupee perspective, a rate cut, yes, is not necessarily very good news. But at the end of the day, we have to remember that then you have the Fed meeting next week, and the Fed is also expected to cut rates. That is the broad consensus in the market. So, there are a host of factors that will influence the rupee, but I don't think that the interest rate cut in itself is the dominant driver for the rupee. It is really about the tariff differential and the tariffs that we face from the US.
Right. Ashish, what's your own house view on the RBI policy, especially as it comes after a good GDP print, and then thereafter we have the Fed meet as well, rupee is weakening. Towards the end of this year, typically volumes thin out as well. So amidst all of this, what's your view on both the rupee and the bond? What's the trade like?
So the house view before the GDP print was a 25 basis point cut. Having said that, I think, like Sakshi mentioned, one needs to look at the rate cut as such is not going to have any negative implication on the rupee. And it's important to, I'll sort of point out a couple of things. In 2015-16 and 23-24 also, you had a very low GDP deflator, and the nominals were shooting through the real rates were shooting through the roof, whereas the nominal were actually sobering. So, I would take a sense that RBI will have to look at it from a forward-looking perspective, and look at how the inflation has sobered down, and the nominal has come just at about 8.7, 8.8% in the last 2 quarters. That really augurs from a forward-looking sense to sort of give some support to the economy and make sure that we don't get drowned in the numbers, which technically look very, very healthy, but from a medium-term sense may not be great. And mind you, in February we're getting the new series, and that could change the way we look at the numbers.
All right, Ashish and Sakshi, we'll leave it at that. Important levels to watch out for. Ashish, they're saying it could break 90, 92 as well, but we still have to be watchful of where the rupee ends right now, trading at 89, 87 to the dollar, just shy of that 90 psychological level. On that note, we're going to slip into a break, but when we return, we'll have technicals with Sneha Sheth of Angel One and also discuss the top trading bets with her.
110 points lower on the index now, back towards that 26,050 mark on the downside. The currency continues to remain around that 80, 89, 90 levels, and good time to get in a quick chart check. Sneha Sheth from Angel One is now joining in. Sneha, good morning. Thank you for joining in. Do you believe that 26,000 now is a very important support level for the index for it to sustain on this weekly expiry session? Your call here and your stock recommendations for the morning as well.
Very good morning. Now, if you see Nifty, yes, from yesterday's session, we are seeing decent profit taking, which has been supported with decent writing in call options. We did see writing in 26,300, 200 strike, and today we are seeing fresh writing coming in 26,100 put strikes even, call strikes even. However, 26,000 put has highest open interest concentration, and I believe in case of any declines towards 26,000, which also coincide with the 20 MA on the daily chart, that would be an opportunity to go long there. So in case of any dip towards 26,000 or 25,970, 80, that zone should be a buying level for an intraday perspective. Apart from that, overall positionally also, I believe 26,000 should be acting as a support. So yes, in case of dips, one can go ahead and take a long positions there. As far as other counters are concerned and positionally, I believe one should be focusing on individual counters as well. And index, the buy on dip strategy remains for both Nifty and Bank Nifty both. As far as individual counters are concerned, I believe we can go ahead and take a long position in Motherson. Now, this counter has been showing decent strength, has been forming higher top, higher bottom kind of a structure recently. I believe one can keep a stop around 115.75 and expect a target of 124. Apart from this, Siemens looks good. This counter as well has been forming a decent, higher top, higher bottom kind of structure and has managed to surpass the resistance zone placed around 3,300 zone. I believe we can see an up move at least towards 3,424 is the level which I'm watching for. So at this point in time, one can go ahead and long this counter as well. Keep a stop around today's low, that is around 3,300, and expect a target of 3,440.
All right, Sneha, thanks very much for joining in with your top picks. On that note, we're going to slip into a short break, but up next, we're going to discuss the market fundamentals with Mukul Kochar from Mastek Capital Service. Stay tuned for that.
Well, the weakness in the rupee is actually helping a lot of these mid-cap IT names. So you have Birlasoft, which is up around 4.5%. Honeywell's doing extremely well. These are basically companies that get a fair amount of their revenues from overseas as well. Speaking about that, look at something like Samvardhana Motherson. That stock too has moved to the high point of trade. And alongside that, we have some of these pharmaceutical names as well, which are spiking. So companies which are more export focused now benefiting from the weakness in the rupee. That's the pharma index, but individual stocks are doing a lot better. Let's welcome Mukul Kochar from Investec Capital to discuss the market fundamentals, his top sectoral picks. The last time we spoke, Mukul, you did like the banking space a fair amount, and you did believe that maybe private capex was some time away. Where do you stand on right now? And also the weakness in the rupee, does that open some avenues for the export-facing names?
Yeah, thanks a lot for having me. See, let's just talk about the weakness in the rupee right now, because in the near term, and the US trade treaty is a very important marker for that. Near term being, therefore, the next 1 to 2 months as we finalize the treaty. The rupee dynamics will be one of the strong sort of drivers of market performance. On the rupee side, absent of the US, trade deal, the tariffs are quite high, which is discouraging trade with our largest trading partner. Therefore, we have gone into a current account deficit. Yeah. Now, a current account deficit at a time when FDI outflows are very strong, which means that the capital account is unable to support. Our capital account, the most stable driver of which is foreign direct investment, today is neutral, which by definition means our current account needs to be neutral. But because of the disruption caused by the US trade treaty, we estimate, absence of a trade treaty will be $60-70 billion current account negative. This is what is causing the pressure on the rupee. The balance of payment imbalance on a monthly basis, which the RBI is trying to manage, but honestly cannot manage for a long term, is the real dynamic today. Yeah. So that is the reality. I think it gets resolved if we get a reasonable trade treaty in place, but that is taking its own sweet time. Earlier we were hearing that it will be announced in November. Now, last few days it came out that it may get pushed to December. And given that these treaties are difficult to negotiate, there may be further delays. In the meantime, the RBI is managing the level of rupee, which honestly is a difficult task. Yeah. So this is going to be the prime center topic of discussion, I think, in markets till we get the trade treaty signed, and therefore will influence markets. On your question on,
yeah, go ahead.
Yeah, on your question on the private capex cycle, somewhat related. There is substantial ammunition and firepower with companies today for investment, and I will just give you one number on that. The difference between the capex of the BSE 500 companies and the profit they make today is roughly 7 trillion rupees. Yeah. Historically, this difference has been zero. Yeah. So historically, that which means whatever profit the BSE 500 companies make, they invest back in the economy. But today, because profitability has been very strong post-COVID, the profit has gapped up, whereas capex is investing as much as it can, I feel, for the Indian economy without opening up a new market for the US. So while there is firepower available, while there is banking credit available, unless we add new market opportunities, I feel the private capex is going to grow at a nominal GDP pace 7 to 10%, because we are doing what we're doing. Import substitution is another 200 billion opportunity, but remember this gap, which is 7 trillion rupees, translates to roughly $80 billion. Even import substitution is not a big enough opportunity for this. Therefore, if we add US as a market through a trade treaty, substantial private capex, which is sitting on the sidelines, can come into play. And that is why last time we met, I said that till we sign the trade treaty, the private capex will also be anemic because there's no market to sell into. So these are the 2 points. Yeah.
Right. Mukul, so in that case, with either in anticipation of a potential trade treaty, would you believe that these export-oriented names which have US as a very major market, be it the textile names, be it the shrimp names, do you believe you should have some exposure to these kind of stocks, considering the fact that they have been beaten down to that extent because of the tariffs and the resultant impact? Do you believe that now, in case a deal happens, these will be the ones that would be the prime beneficiaries of that?
So almost, that's a fair trade, yeah. So probability based that we, if we get a treaty, the probability of that is high, yeah. The problem is that unfortunately currency management has become a daily task, yeah. So the probability that we get a trade treaty in some time frame is high. Therefore, for beaten down export names, I would say go and invest, because I'm also saying the probability of getting a treaty is high. The problem is the market is and the currency is fragile right now. So, and I don't know whether the currency can be managed for a period of 1-2 months, and that is the time that takes to get the treaty. So we will get interim volatility. It is just something that investors should be aware of. If they want to hedge and protect themselves against this volatility, that they can. But the probability that we get a trade treaty is high. For stocks that have corrected and probability based are good investments, absolutely go ahead and sort of buy those stocks.
Mukul, very quickly, running out of time, on the banking stocks, your view, especially in light of these comments coming in from the Ministry AOS Finance, to the Lok Sabha, that there is currently no proposal of merger of PSU banks on the table. This despite the Finance Minister, of course, earlier indicating that this is something the government is working on, but it looks like immediately it is not on the government's radar. How would you play the PSU stocks in that case?
So honestly, Ritu, the PSU banking space, I've generally found that to be very attractive over the last few years. Undeniably, they have their challenges. They have a social angle to them, given that they are government owned. But operations and policies regarding PSU banking space has improved substantially over the last 10 years. Yeah, they are very well capitalized. The NPAs are very well provided, 90 to 95%. Their cost of funding is as competitive as the private banks. Books are completely de-risked since they've been sort of just consolidating on their book for the last 5-6 years. I would contend that the books are in a better spot than a lot of private banks, and ROEs are 15%. In that context, I expect these stocks to re-rate further. Yeah. So in terms of returns, you will get the ROE return, which is return on equity of roughly 15%, and any re-rating that you may get. So this is an attractive space to invest. And the fact, if government is saying that there's no disruption that comes from mergers, should give investors some sort of comfort that they can just invest based on fundamentals, and government action is less of a factor that they need to sort of account for when they invest.
All right, as we speak of the banks which are gaining right now, PSU banks form a fair amount of a chunk right now. If you look at the private sector banks, obviously they're buoyed down by the changes in the Nifty bank weightage. So we have the private bank index coming up for you at the lower end of today's trading session. And on the other side, if the PSU bank index comes up for you, you'd see the outperformance. The private bank index down about 1/3%. PSU bank index, that's about 0.8% higher. So if you put both of them together, it's about 1.2% sort of outperformance that the PSU bank index is showing. Thanks a lot for joining in, Mukul. With that, we'll take a short break, come back, focus more on the markets as we speak. The Nifty virtually at the low point of trade, down about 112 points. Welcome back. You're watching us here on Trading Hour, and here's the F&O desk. So what are we looking at right now? The market is currently at the lower end of today's trading range, virtually at the low point of trade for the Nifty. Now, from yesterday's high, it's corrected about 300 points, so just watch out for that one. The mid-cap index too, marginally in the red right now. And what is at the high point of today's trading session so far is the India VIX, which would come up for you up around 2.5%. And that's actually ahead of the weekly options expiry, and market breadth too firmly in favor of declines. Where that moves, something that we will be tracking as we move along the course of today's trading session so far. Just keep an eye out on a few of these buzzing stocks. We have GSPL, which is doing well. Balkrishna Industries is doing well. Birlasoft and MRF. So a couple of these tire makers and a few of them which actually get their revenues in dollars. So all those counters are fairly well bid today. But the interesting part is from the options side. On the way up, there is definitely strong supply. 26,100 call writers, fairly active in today's trading session, premium of 24 rupees. So immediately about 26,100 is where the supply is likely to come by. 4.7 crore shares outstanding on that strike. But at the lower levels, if you look at the 26,050 put, there has been a big jump in the price of that option as the market moved lower. It's a 48% jump. Moments ago, it was 24%. So all these guys have made their money. At what point did they book will be extremely crucial to track. The 26,000 put, on the other hand, was mostly in the red for today's trading session and now just has seen an 80 paisa up move, which tells you that there is still some selling at the 26,000 put, which implies that there is support at around 26,000 even as the markets moved fairly lower. So those are a couple of levels that we'll be watching out for. And then there is a pair trade which is taking place in the PSU Bank space, fresh longs in Union Bank, whereas a lot of shorts added in Indian Bank. So those are a couple of stocks we'll watch too. Actually, we'll take a short break, come back, keep an eye out on the markets.
At the lowest point of the day is the index now 130 points lower, below that 26,050 mark. We are heading into the second half of the trading session. The broader market still trying to hold out in the green. Take your leave on this edition of Trading Hour from Mangalam, Ritu and me. Thank you for watching. Halftime report on the other side.